And where are you, by the way? There, we can try that again.
I am in Lake Tahoe right now, so I'm excited to be here. It's got some fresh snow.
Nice. I got some fresh snow too in Kansas City, which is not quite as exciting as Lake Tahoe snow, I don't think. But
lovely. How are the hills?
Non-existent. It's great. Yeah, we. I to get my coffee, I have to take like a 5% incline, and it's a little bit sketchy. But other than that, there's really no hills in Kansas or Missouri. So that's my life. That's my life. And were you in SF? Were you in SF earlier this week? You've been traveling a bunch past couple weeks.
Yeah. I live in San Francisco, so I mean that's it's just like a 3-4 hour drive away. So, but San Francisco's home.
I've been really appreciating your Twitter recently, especially like since we had our first prep call a while back, and I started like paying attention more to the things you tweet. You have like some musky vibes, not in a smelly way, but in an Elon way. Like the way that you handle Twitter, I really appreciate. It is a compliment, dude. It's for a payments-oriented CEO that was born in Russia, moved to Tel Aviv. Like you are or moved to Israel, I should say. You are you're unique when it comes to your Twitter presence, so I appreciate that about you.
Thank you.
Let's get into this. So, Dimitri, welcome to For Fintech's Sake. We've talked about breakfast, we've talked about hills. Now let's talk about fintech, and let's talk about you. So, where are you from? Give me your background and just kind of like how you got to the position that you're in today.
Yeah. So, super quick background. I was born in Russia. My family moved to Israel when I was 5 years old. Went to elementary school in Israel, moved to Seattle when I was 13. My dad was at Microsoft, and we moved to Redmond, Washington. Went to junior high and high school in Redmond, and then came down to the Bay Area for college, and more or less been in the Bay Area since. And eventually, through a bunch of early stage startup kind of trips, ended up with kind of facing a lot of the problems that we're trying to solve in Modern Treasury today, and co-founded the company in 2018.
I love it. What is it? I mean, this is not what I was planning to ask you, but I'm truly curious. What is it like to be a Russian-born individual that has the experiences that you have technologically over the past couple weeks? Like, has that been a weird emotional experience, or like were you so young when you left that it doesn't even really resonate?
I was really young when I left, so I don't have a ton of like very super personal kind of connections, but a lot of the places that have been sort of, under attack in Ukraine and so on have been places that I kind of grew up hearing about. Both my grandparents on my dad's side were from Ukraine originally, and during World War II they sort of went to Russia, and then they joined kind of the Red Army and went all the way to, Berlin and things like that. And so hearing a lot of those places under attack, I think, especially by, from the Russian side is really kind of bizarre and ironic and terrible.
Yeah, I mean, your parents were doing like CS back then, right? I think you told me a story about your dad like losing the if key, and maybe we can transition back into something a little more jovial. But it sounds like there's like a genetic history of deep technology knowledge and like kind of coming from that side of things.
Yeah, well, the funny thing is it didn't really pass down in the sense that they kind of tried to force feed me a little bit of CS because that's something that they love. And once, I think as a lot of kids, once you get force fed something, you don't really like it. So by the time I was sort of in high school and, going to college, the last thing I wanted to do was, major in CS or something like that. But yeah, they, both my parents were, are computer scientists, and they studied it like pretty early, wouldn't quite call it the dawn of the, computer age, but
sure.
It was like, 20 years after the dawn and in the Soviet Union, so it was like pretty close to kind of like very very early technology. And so yeah, the story that you kind of talked about, I don't know if it was my dad or not. Somebody in their kind of college class lost like a physical key because they had sort of this computer where they had the way at least I heard the story was there was 100 like key kind of holes, and you get this briefcase with all the commands. And so you kind of wrote it out on a piece of paper, and then you went and you kind of like assembled it like IKEA style. And you went and you said like if, then, print, beep, like whatever it is, the things that people are doing.
I like that you added beep.
To think, it's like, if you have an extra line in your program, you might as well just add it there for fun. Anyway, it was one of those things where you don't, it's like we're so far away from that. It's kind of wild that was like actually something that how people kind of worked with computers back at a certain point. That was kind of the UI UX of like what that actually looked like.
Yeah. What did you think you wanted to be when you grew up? Since your parents like tried to technology you, and you were like, nah. What did you think you wanted to be?
Well, so we moved to Seattle, and for me, one of the things that I just really loved about the Pacific Northwest is all the outdoors, kind of access to the outdoors there. There's just amazing, mountains and islands and forests and all that sort of thing. So I was kind of just trying to, get out as much as I can and do kind of backpacking trips and go camping and go skiing. And my first job actually was a ski instructor for 5-year-olds. Which is sort of you learn a lot about how to run a company when you handle 15 freezing cold 5-year-olds. If you can handle that, there's a lot of other things that you can take that are thrown at you. But anyway, I love the outdoors. I really care a lot about still do care a lot about the environment and climate change. And so when I went to college, I ended up studying energy science and technology, and kind of just really focusing on kind of how to fix some of the climate mess we're in. And so, my parents were definitely ahead of their time, focusing on computer science, but it did not, despite their best efforts, or maybe because of their best efforts, it did not translate.
I mean, you circled back. It's not like you don't know what an API is or anything now. I mean, it seems like it's come full circle.
Yeah, I'm learning.
Fair enough. So take me from your time at Stanford. I mean, you weren't studying kind of what you've gotten into. So how did you kind of bridge the gap into modern treasury? Like, how did you get to that?
Well, so the thing that I was very interested in always was startups and entrepreneurship. And being at Stanford, you're really in the kind of heart of Silicon Valley. And these days, it's a little bit more of a kind of a concept that's in the cloud. But at the time, certainly like 10, 15 years ago, even 3 years ago, maybe, that was a very physical sort of place. And you could actually go and meet a lot of people in and around kind of campus and Palo Alto and San Francisco and stuff like that. So I ended up getting involved with a number of kind of early stage companies. And one of them was LendingHome, which is an online mortgage company. And I joined that as a product manager. I was kind of running the investor side of the marketplace. And that experience, as we scaled that up, the company went to, 300 employees or something like that. We were kind of focused on providing the best financing for fix and flip mortgages. So kind of post 2008, the word mortgage became like this very loaded term. And so you went to a bank and you said you wanted a mortgage for, let's say you and I are doing renovating a property in Kansas City or something. You're like, that, we're trying to buy it, put some funds into it, renovate it, and then sell it in, 12 months. And that was very different from the word mortgage, which meant 47 days of underwriting and a lot of paperwork. And if you're trying to do this like 20 times a year, it would be very operationally heavy. So that was kind of the niche that LendingHome stepped into and said, hey, we can actually provide like much better, faster financing for this. And as we were kind of producing these loans, we're turning around and sort of selling them to institutional investors, retail investors. A number of transactions are kind of flying around, like wires are going out to the borrower to actually fund the mortgage, ACH debits to collect that every month. No
webhooks, no webhooks, just fear.
That's right. And I think the thing that really broke it was the kind of the retail piece, right? So we built kind of this retail experience. We jokingly called it ugly Airbnb because you'd log in and you'd see all these properties, and instead of them being the best possible photo and just like this beautiful place to attract to stay, it's like, here's some water damage. Like, look, you should invest in it. Like, it's so easy to replace, whatever.
Lean into the shittiness to make it seem like a better investment.
Well, that's the value investing, like, right? Like, that's what you're getting sort of from it. So you basically get into watching these kind of properties kind of fly off the shelves, if you will, and then the fractional piece and then the investments and so on. Each one ends up in a book transfer or an investment or an ACH debit or something, and then it's an opportunity for a payment to fail, for something to get messed up, things like that. So anyway, we ended up spending a lot of time on the payment ops problem, and that sort of led us to go, I wonder how other people do this, and turned out not a lot better. And so we ended up starting Modern Treasury out of that.
Yeah. So before we jump into Modern Treasury, because that makes a lot of sense as a bridging of the gap. I spent 2 years in a mortgage bank here in Kansas City, and it was one of the more fascinating. Like, I spent basically no time working on mortgage, but I spent most of my time asking about it because I was just so fascinated by the subject. Was there anything, like, as you were leaving, or that's still in your head, that's, like, stuck in your craw in terms of, like, problems that you want to solve with the mortgage market that you haven't with Modern Treasury?
That's such an interesting question. Well, I think one of the big learnings for me out of that experience is, if you think about most fintech companies or lending companies, I should say.
Sure.
And I think it's true for a lot of banks as well. What they really are at their core are sort of risk and marketing organizations. Yes. What I mean by that is they try to figure out some area to focus in, some segment that they think they understand. Hopefully they do understand it, but they build a kind of a view of the world that allows them to underwrite and to provide loans and to understand and to find investors for, and so on, a particular type of borrower. And they are not like product and technology companies in some ways, and it's hard for them to invest in that in a big way. And so one of the learnings for me, and I think this is one of these things that, somewhat applies to what we're doing now, but I think you have to figure out how to be able to sort of do the best kind of marketing job and attract all those folks in that segment while also providing a great product experience. And that's a really hard thing to do at the same time. Like, those are two pretty different skills, and organizations don't necessarily have the ability to sort of be best in class at everything. And it's true for individuals as well. And so I think there's the biggest learning for me was just really like figure something you're the best at and go be the best at that, and don't try to sort of like kind of don't build everything, like buy what you can, and so that's kind of allowed us to move a lot faster, I think, at MT. But it's something that I think is just like a more general kind of change in how I don't know, it's like specialization of labor or something. But it's all of a sudden you basically have a lot of these companies that are popping up that are doing these things that you'd say, oh, well, that's kind of a narrow thing. Like, how big can that be? And it's like, the answer is, well, it can be really big because everybody's doing it, not very well, and kind of with a very small amount of their effort. But if it was there, it was easy, and you wouldn't think about it. That's kind of the magic of, software or what have you, is you can just kind of copy paste it across a lot of different companies, a lot of different use cases.
Yeah, it's funny. I mean, it's like watching the unbundling, right, and then watching the rebundling happen. It's funny how it's happening in fintech and happening on the technology side, but I still think like community banks and lenders, to your point, like it almost shouldn't to some degree. Like, figure out a way to pull in the deposits and whatever to be able to lend. But other than that, like MBKC was a good example where we were, $800, $900 million bank in terms of assets, but we did $2.5 billion a year in mortgages, and it was all residential. It was across all 50 states, and that was like that was what the bank did, and there's a certain amount of like, in 2008, that was an issue. In 2009, that was an issue. But in 2019, it was like the biggest year in the history of the bank, right? It was unbelievable, the revenue that was coming in, sort of thing. And it was like, if they would have gotten into auto or gotten into this or gotten into that, I don't think that would exist. And also, it's just like being a 5-star rated anything on NerdWallet seems to be worth its weight in gold these days, which is hilarious to me. It's so wild what that's all become.
Yeah, but it's sort of like you just like be the best, whatever it is you can be, and then the world comes to you if that's the case.
I'm gonna quote you on that. Be the best, whatever you can be, and then the world will come to you if that's the case.
Yeah, there you go.
I love it. So the question that I want to ask to bridge the gap into Modern Treasury, how did you come up with the name? Because how depressing of a world do we live in where you had to go out of your way to provide the fact that it was modern? Like, was that a big discussion? How did you come to that decision?
So I have a funny story for you on that one. So we actually originally called it Turnkey Treasury, and that was the name under which we applied to Y Combinator, and we hadn't yet started the company legally, but that was kind of the name that we applied under, and that was kind of how we talked about it. And YC has a lot of these different kind of traditions. One of them is you refer to the founders as the name of the company. So it's like the Airbnbs, the Stripes, the whatever. And they're like,
I did not know that. That's
like, this is the Turkeys. Huh. And we're like, we don't want to be the Turkeys. I don't know if I want to be the Turkeys. And then people are just confused. They're just like, what is why are you building a treasury for turkeys? Like, are you going to Turkey? Like, are you like from Turkey? Like, what, it just did not work at all. Like, nobody heard the N in Turkey just was silent, and it just didn't work. And so we were like, okay, we need a better name. We had gotten into YC. We were like, hadn't yet incorporated. We're about to incorporate. And so I remember Matt Marcus, my co-founder, was flying to Florida, and he was on a plane, and he was like searching instant domain search, and he texted us, and he was like, hey, my flight's about to take off, but moderntreasury.com is available for like $7. You should get it. And so Sam and I were like, yes, do it, sort of, and that's kind of the story behind it. And then, I think it's a great name, but it was a little bit of a last minute, accident how we kind of stumbled on it.
That's hilarious. Shouts to Matt Marcus, wonderful product person, wonderful technologist, also good at domain searches. Who knew?
That's right. That's right.
Man of many talents.
Many talents.
So take me through the YC process. I mean, you all are in so many ways like perfect for YC, right? Like the kind of enterprise oriented, providing something that a lot of them don't have or wouldn't want to build themselves. Like it makes so much sense for you guys to go through that. But I also would imagine that building your product took some damn time. So like, were you able to take advantage of the network and the actual accelerator? Like, tell me about that kind of that issue there with building infrastructure.
Yeah, I don't know. It's interesting. I think that you're right that it's an enterprise product that people need as they build their companies, but it's also like this very deep infrastructure thing. And I think it's a little bit harder to sell that. First of all infrastructure is fairly critical. It's true for financial infrastructure kind of in particular. And so generally speaking, nobody wants to buy that from a startup. And so one of the biggest challenges that we had was really just getting going kind of both on the bank side and on the company side and kind of engendering trust. And like, why should these three people who apparently know something about it from their previous experience, but really there's no real obvious reason why would be around for long, right? I mean, forget about like the elegance of the API. The question is like, if you built to this thing, is this going to be around in however long from now, right? And if the company's not around, if they don't have the runway, if you don't have the kind of, how do you know that this is really something that you should kind of bet on in a way? And so, one of the hardest things for us was just kind of getting time and attention and so on from both banks and from potential kind of prospects and customers. And so, the funny thing is we went through YC. There's this meeting every week that you have with your partners and kind of this small group of companies that are, generally speaking, similar to you. So like for us, it was all enterprise companies. They weren't all fintech, but they were all B2B companies. They were just kind of selling to companies. Yeah. And the idea is you sort of show kind of your progress and share like the biggest problem you're trying to deal with like this particular week. And, the prototypical company that you can talk about as like the perfect YC company, I think, there's sort of that graph that they try to kind of, get companies to have. By the time demo day rolls around, that like, here's growth week over week for the past 10 weeks. And we were not one of those companies. We were very consistently at zero the entire time. And so we didn't even go live until about 3 months after we wrapped up with YC. So we're probably month 5 or 6 into the company's life for us to actually go final live. But, we were building, to your point, we were building some pretty like complicated, heavy infrastructure. We knew what we were doing. Like we'd seen a version of it before, but also, like some of the banks we were working with was the first time on those systems. So we're like learning about that. YC was a wonderful experience, but I don't know if as a financial infrastructure company, I don't know if it's quite perfect, quote unquote, because it just takes so long to build and it takes so much trust to like get people to say, okay, yeah, I'm actually going to, put faith and future sort of into this company.
Yeah, no, I mean, it makes sense. It makes sense. And especially with the time, as you said. So with the benefit of that 2020 hindsight, maybe like outside of, working on the name turkeys and things of, low-hanging fruit like that is less Thanksgiving oriented. What would you have done differently? Would you have done anything differently? Like, would you have incorporated earlier and started building earlier to try and have, we always want more traction earlier, I guess. That's a dumb question. But any learnings that you would give to other founders thinking about that process?
I think looking back on it, we went really quickly. I mean, at the time it was kind of frustrating and slow, but when you really think back to it, we're not 4 years old yet as a company. And so I think, we've come a pretty long way. So I think from as a company, like in month 6 to be live with, it was a health insurance company called Sign Benefits that was our customer, like very complicated to this day, like, a pretty complicated use case with lots of like reserve accounts and, health and dental and benefits and things like that. Yeah. That's not an easy first customer. And we went live with Silicon Valley Bank was our first partner bank. And so, I think that ultimately, like, I think the best advice I would give is if you really want to go do something, just like go do it with like all the, like there's no perfect timing and you can't like the fact, just go, just like stop thinking about it and go. If you're convinced that you want to do this. And I think this is the part that I think is, for whatever reason, we had this unreasonable conviction about this product needs to exist. And it's because we were the customer, like we would have been the customer at LendingHome, like we needed it, like, and we were like just like mad that we had to go like deal with it and build it and deal with it for a couple of years. I had this meeting every Wednesday that I just dreaded. That was every Wednesday, we finance and ops and capital markets and customer service, and everybody could come and sort of point to bank statements and say, what is this? And kind of send us on a wild goose chase. And it was one of those things where I was like, oh my God, like where are the tools to get everybody to kind of self-serve those questions? And when I went to other companies kind of around the Bay Area, instead of somebody saying, oh yeah, there's this tool that's like awesome, you should use this, what I got was, oh my God, I have a Thursday meeting and I hate that, at other companies. And so it was, I think that conviction that we got from just being like, this is insane, this needs to be fixed, we know how to fix it, and if we fix it, we think it's valuable, so let's just like go do it, like it was really important.
It's really interesting. What I've been thinking, I mean, I've obviously been listening, but as I've been talking about this whole thing, I'm even coming back to are the most successful YC companies even successful in the midst of YC, right? Like I think back about Airbnb and Stripe and a lot of these companies that we look at as like the darlings of YC, like you guys, I mean, it's weird to think that it's only been 4 years, man. When I think about building a product like that in 6 months, in my head, I was thinking like, oh man, it would have been good to start that. Like that is breakneck speeds. And I wondered the Stripes, the Airbnb, like were any of them actually feeling good going through the process, or did they just get put under such a pressure cooker that they were forced to come out the other end like with something? It doesn't even seem like the ones that like,
I don't
get
think
A's
it's a pressure.
Do good.
People talk about YC as a pressure cooker. I don't think it's a pressure cooker. I think it's just you just get the freedom to go do whatever you do, and it's kind of one of these things where one of my like favorite authors is Robert Karen. He talks about how he studies political power, and he talks about how like people talk about power corrupts. So he's like, power reveals also, like whatever you do. And so like if you have the freedom to sort of do whatever for 12 weeks. I think there's an element of just like some people start like changing ideas all the time and they kind of pivot around, and other people actually resort to this like, I don't care what happens, I'm doing this, and it's going to happen no matter what. Like we were kind of in that category, and it would have been very easy to say like, hey, it's been 4 weeks, it's been 6 weeks, like you've gotten zero like apparent progress. Like you guys wrote a lot of code, like nobody cares about that. You had a good conversation with somebody at the bank, like nobody knows about that. Like what is your apparent progress that has happened over this past month? And you're like, we understand ACH a lot better. Like, that's a very strange answer to some degree, but on the path of being successful, like you have to understand ACH better to build this company. Like there's no way to get around it. And so, I don't know, I think there's an element of, just as a founder, you get all this advice and you kind of just should like not listen to a lot of it sometimes, because you should just like, I mean, to the degree that you kind of, again, have conviction about building something that you hopefully are right about, but the reality is like if you're going to build an infrastructure company, it just takes a year or two. Like you just can't look at it in month 2 and be like, you haven't built it yet. Sort of like that's a meaningless kind of statement about like a heavier infrastructure project. So yeah, so I think that there's an element of like, I think all kind of advisors and investors and family and everybody wants to see apparent progress, and it's like, well, wait a little bit, like we're getting there.
Yeah. You're giving me a little bit of PTSD. I'm only 4 months out of banking as a service, and this is stressing me out. How do you this is one of the things I wanted to ask you, actually. And then I want to ask you about goal setting, because that got me down a path. What category of buzzwordiness do you consider Modern Treasury to be a part of? I'm guessing, I mean, it feels like it checks a lot of boxes, but like, do you consider yourself part of the banking as a service world, part of just like payments infrastructure? What buzzwords do you pick to describe yourself, maybe when you're talking to VCs or whatever?
I think of ourselves a little bit more as like just straight up enterprise software. Like, I don't think of ourselves as, I mean, banking as a service to me sounds like banking. And we don't do that.
Yeah.
Like we have no ambition to be like a neobank or something like that. Our ambition is closer to building Excel than it is to building a big bank. And so,
but you power neobanks though, right? I mean, that's the distinction.
We power neobanks, but Excel powers neobanks too.
Yeah.
So I think I think of it as really as like tools and software, and like sort of the gospel of just like software that everybody can use in different products. And I think actually when we think about new products to build, new features, kind of feature asks, things like that, one of the tests that we think about a lot is, so how does how general is this ask? Like, how is it actually relevant to a ton of different companies and different industries, or is it very niche-y or very specific to a certain industry? So, in that spirit of Excel, if you will, I think of it a little bit more as like just like enterprise software, dev tooling, API tooling, finance kind of software, finance kind of team-facing software. Much more so than maybe some of the buzzwords that are flying around Twitter.
Well, that gives me faith in the longevity of the company and the longevity of your mind state as well. So I'm curious. I mean, out of that, like maybe we should get into some use case stuff. So payments, ledgers, virtual accounts, and like we said, you power some neobanks, you power ClassPass, you power some fascinating companies on like the brand side of the spectrum and on the finance side of the spectrum. So I'd love to maybe if we could just like grab each one of those, and one from one side and one from the other, and just talk through how do you serve them? Like, are they pulling down payments, ledgers, virtual accounts, or are they just pulling down one? How do they handle the grocery aisle that is Modern Treasury kind of thing?
Yeah, they can use all of the above or some of the above, whatever makes sense to them. But so to maybe we can start at where we were really born, where our product was born, was the literal interface between a company and a bank, right? When you think about the first API kind of set of tools that we built, it was really about how do I build an app or a marketplace or a fintech app or whatever, and then there's like some button or some action that happens, and I need to initiate a money movement of some sort. It could be an ACH, it could be a wire, it could be a paper check, it could be a real-time payment, but there's this decision that the code makes, and there's no invoice. It's not like an invoice came in from outside and it got approved. It's actually the code generated it, right? So if you think about a lot of our customers, they have some flow like that, right? Like if you're a neobank and you, deposit funds, like when you first open the account, the first thing you probably do is you have to deposit some funds into it. And how do you do that? Like you have to basically tell the neobank to go pull money, ACH debit money out of their account. We can help with that. So that's kind of step one. And there's a lot of things around it because you start thinking, how do I handle the returns? Like, what happens if it fails? Like, what happens if, what if it's outside of anything that we've seen before? Like, should there be an approval? Should there be some risk rules around when it actually goes for kind of, approval by a human? Mm-hmm. How does it get reconciled? How do I get webhooks to be able to send the email that, hey, you're depositing, let's say you're an investment platform and you're depositing $10,000. Well, guess what? Like the moment the $10,000 arrives, what I really want to do as a growth PM in that company is send you an email, a notification or something and be like, hey, come and actually pick like the stocks or what have you that you're going to buy now. So, well, how does that happen? You need a webhook, which is basically a status update that gets proactively pushed as soon as that money arrives in the account. And depending on if it's an ACH or a wire or a real-time payment or whatever, like that, those timings are different, those returns are different, things like that. So that's kind of product one, is the literal interface between the ambition and the desires of the company and the financial kind of banking system. And then from there, if you think about other products that we have, like for example, ledgers, is sort of a step into the company a little bit. And what I mean by that is if you're ClassPass, you have a certain amount of funds that are sort of allocated to a wallet that is held by a studio, like Bears Boot Camp. Mm-hmm. right? And so like when I go there, they need to decrement my ledger. I have $100 and move that down. Bears Bootcamp gets like the $20 that they just took out of my account. No money actually maybe moves that exact moment, right? Like the money, the actual payout to the studio might happen at the end of the month. There might be some sort of like, depending on the marketplace or the product or the use case, there's some sort of like payroll element to it, or there's some sort of like it could be anything. But in that sense, when you think about ledgers, it's really a financial ledger database for a company that is managing like a lot of user accounts, a lot of balances, a lot of almost anything that you log into and you see a balance.
Yeah.
Like there's somebody has to store that somewhere. And by the way, it's not just dollars, right? Like there's so many like interesting use cases for ledgers in video games, right? Because you log into a video game and you have 5 sheep and 4 stone and 3 gold. Well, guess what? That's a ledger. And you log into United Airlines and they say you have 35,000 miles in your frequent flyer mile account. That's a ledger. And so we've actually just recently launched what we call custom currencies. You can define any currency you want in the empty ledger system. And sometimes it can be, Ethereum with like 18 different, 18 decimal points or whatever, or it can be, sheep, which are generally, they don't have decimal points. Yeah.
This is a kind of out of left field, but could that be the precursor to like infrastructure for a rewards program?
For sure.
That's really interesting. Carry on. I was just the rewards thing still blows my mind. It's so hard to build, and it doesn't seem. I mean, I know there's like really big providers out there doing it, but I'm still looking for somebody that's like doing it on a cutting edge that actually allows people to be able to customize and like do cool shit and not feel totally constrained.
Right. Well, it's interesting about. I mean, I think the interesting thing about rewards is that there is actually. I mean, there's the kind of the database part that matters, but then. I mean, there's actually a financial kind of outcome of it, right? Like most rewards have like you redeem a grocery coupon at Safeway, or you redeem a travel coupon. You like actually fly somewhere. Those types of things. There's now like some exchange of value that happens at the end after you've like accumulated all your rewards, and so there's kind of this. Yeah, you zero out the ledger database, but like there may actually be a payment associated with that. So anyway, all this stuff is kind of tied. But the way we think about it, and really why we're kind of going into some of these other products, and we're working some new ones now that are just again like it's not everybody needs it who needs a payment kind of payment ops platform. Like not everybody has let's say a loyalty program, but a good number do, and it's we have 100 plus people focused on that problem that may not be able to do that inside of their own company, and so we can kind of go build the best in class software for that.
What's your perspective on the whole Fintechs eating the world, brands becoming banks, and every brand becoming a payments company, and all that kind of stuff? It seems like you're perfectly positioned for it, from my perspective, in a way that isn't just a bunch of hype. I think there's a lot of like card issuance and things like that. It's a sexy thing. Somehow card issuance is sexier than what you're doing, but what you're doing actually it has a sense of stability and lack of churn, I would think, where you're just going to keep getting better and better and better at your core competency, versus card issuance is still just kind of card issuance, and at a certain point it's about economics, not technology. Anyways, I'm not even quite sure the question I'm asking here, but it's just like the juxtaposition of these two things is interesting.
I think the whole embedded fintech or fintech is eating the world thing or whatever, I think what it's really saying to me is banking used to be done through branches, and nobody wants that anymore. And so what is the equivalent of a branch? Well, the branch should be inside of the Uber app. Like the branch should be inside of the Gusto app, like things like that. So that obviously implies a whole bunch of different technologies. I mean, ATMs were like used to be, that was like a cutting edge technology at some point, right? Like they were like all of a sudden you could not have to go into the branch. You could stay outside the branch, and you could get cash at 2 a.m. or whatever, because the branch is only open from 9 to 5 with a 3-hour break for lunch. Yeah. But anyway, so I think that's what fintech is eating the world to me means, is like all the stuff that you might want to get from a bank, it can be provided by other brands, and it can be provided inside of the product experience And frankly, I think at LendingHome we were early to that. Like we part of the benefit that we got sort of is we got dunked into the reality of building one of these things pretty early. We're doing mortgage wires over the internet in 2013. Like that was kind of crazy at the time.
And speaking of anxiety, mortgage wires in 2030, just that sentence stresses me out.
Yeah, but you know what's really interesting? About that? Like people had the same reaction to credit cards in like 2005 or something, right? Like it used to be like I think there's like the first phase of the internet, commerce was all about credit cards.
Yeah,
and it was like think about the big successes in early internet like history or whatever, right? Like it's companies like Amazon, it's Netflix, it's Expedia. Guess what happens from a payment systems perspective? You look at it through that lens, and it's just like I have a web form and I have to accept a credit card. Like that's what those companies are doing, and so that was like really painful. And then in circa 2005, 10, whatever, like you had a bunch of companies like Braintree, like Adyen, like Stripe that started getting built up, really focusing on providing that credit card infrastructure to enable a lot more companies to be able to do that. But you move over, and people used to be afraid of, like, they had like an extra credit card. They would put an extra credit card, like number, that's like my internet credit card. And it was different from your other credit card because you actually, didn't trust the web. And maybe for good reason to some degree, right? Like at the time, there's a lot of immature, infrastructure, immature kind of security practices, things like that. And so you fast forward to 2013, and your reaction to sending mortgage wires over the web is exactly right, but it's actually very similar to like the 1998 reaction to credit cards over the web. And so I think there's, in a way, like this wave of infrastructure that we are building, we're part of, but there's like a wave of companies that are getting built up that are messing with industries like health insurance and like real estate and like investing and financial services and payroll and benefits and all these things that actually you don't do over credit card. Like they're ACH wire things if you look at it from a payment kind of systems perspective. And so I think it's interesting, but I think there's some really interesting parallels there.
Yeah, and I mean parallels into the amount of stress that I feel when I move an NFT from MetaMask to Coinbase or back and forth or Coinbase wallet, I should say. I mean, it's the overlap there is similar, and the amount of ETH that you lose. Yeah.
No, and people say crypto is like it's great because it's not reversible, and it's like that doesn't sound great. Like if you double remit something, like that's bad. Like you want to be able to pull it back. You want to be able to have some sort of like approval flow. That's even more important if it's reversible. So like it's from a pure engineering perspective, that sounds great. From an ops perspective, at a big organization, that's terrifying.
Yeah, philosophically, it all sounds great. Philosophically and technologically, we're all like fucking on board. But as soon as you actually have to run it through a risk department or have a conversation about an enterprise, things change. Speaking about conversations with enterprises, I'm curious. So building all this technology, like really leaning into that, how did you start thinking about distribution? And obviously, you had that. You said first customer 6 months in. Kind of how did that progress? Like how do you go from 1 to 2 to 10? What was that whole process, and kind of what's been the strategy, I guess, as you've gone through that? Yeah,
we thought a lot about it from that element of trust. Like how do we get people to trust us with something that is pretty core and critical and like it's not core to their product, but it's core to their operations being well run. And so Rachel Pike, who was the first person to join us, and she kind of has built out the growth team, really kind of joined us around month 6, and she really focused on how do we build out the brand, the content, a lot of the stuff that, I'm sure you've read some of our journal articles, things like that. Some of the thinking behind that was a little bit like, hey, well, if you keep kind of Googling around things, like let's say you're a developer building this thing or PM at some company and you're trying to figure out how to like do this. If like you Google a bunch of things and you keep finding us and we sort of sound friendly and authoritative and it sounds like we kind of know what we're talking about, like maybe it's worth giving a shot and actually using the product. And so some of it was kind of leading with category creation. Like within payment ops is its own category. It's actually very different from like the bank portal or like accounting or like some of these other kind of very well established set pieces of software that people use. And the reality is a lot of times people are using G Sheets and Excel to like track what happened, and then some failure happens and they're digging in the kind of G Sheet from last Tuesday being like, okay, wait, did we send this? Did we not send this? Like, what happened? And I think that's something where trying to connect it all into a single kind of elegant piece of software is like, it's. I think if you really think about it, it makes a lot of sense, but it's not something that people have seen, and so you have to kind of create the category, if you will, and show them this is possible, and you don't have to kind of you can kind of combine a lot of these different activities into one. All the way to the point where you can do continuous accounting. I mean, which I think is really powerful. Like, we're not there yet in the full kind of vision of what we can do, but if you think about the marketing stack, and you go to Google Analytics and you see how many people checked out your website, that's a real-time thing. Like, there's no month close for like who checked out my emails. Like, you can see the read rates immediately. And the reason why you can is because there's a lot of instrumentation around it. So if we're building instrumentation around every single payment, if we really do that for every single payment in enterprise, we can give an instant 10K for the whole company. And that's a long-term kind of thing to try to get to. But what's really interesting about that is what happens once it exists. I mean, who has access to it, right? Like the SEC and others are saying like you need to be able to, as a public company, like sort of release this quarterly statement. Well, guess what? It takes like a quarter to put it together. Like actually, it's not just a purely kind of legalistic thing. It's actually like hard to kind of get it together. So if you really had a kind of a real-time dashboard of the state of your business, there's a lot of, I think, good things that would come from that. But like, how do you do that when you have and especially if you're a big enterprise, like you're across banks, across geographies, across business lines, it gets really, really hairy. So, but anyway, to go back to your original question, so we had our first customer, our second customer. So our first customer was somebody who was a friend of mine. I'd known Will Young and Sana before, and that was kind of the initial connection. Our second customer was somebody who just kind of saw our announcement and wanted to kind of play with new YC software and reached out. It was a home flipping business. So kind of knew a little bit about LendingHome and kind of enough things got put together that was like really excited to try it out. So it was kind of a cold inbound outreach. Our third customer was actually a referral from a bank. So it was somebody who was a little bit bigger of a company trying to figure out how to solve this. Silicon Valley Bank had just seen Sana go live, and they were just like, "You should talk to these guys."
Wow!
And so
that is three very validating data points. Like that's three different things. Three different ways of them finding you. That's right. Must have felt very good to have that amount of diversity in those early days. Yeah,
and by the way, that was across healthcare, insurance, and real estate.
Yeah.
So like already kind of across different industries. But yeah, I mean, so I think to some degree for us, what we felt like was, validation is probably the right word. Like this really is a problem, and people really are looking for like solutions for it. And then kind of the focus for us was how do we kind of just obsess about the few customers that we have and like make them super happy and build out the kind of the right UIs and the right kind of things that they needed. And not try to grow like super, super quickly for the sake of growth when you don't really know if your product is actually right. And I think there's this element of go slow to go fast that's really important in good software because you just have to have seen. And by the way, like guess how long it takes you to like observe a month close. Like it takes a month. Right? It takes like you can't do this 12 times this month. Like you have to do this like it takes a little while to like.
It takes a month to take a month. Yeah.
Every month takes a month. That's one thing we learned. we learned that at Modern Treasury the hard way. That every month is 28 to 31 days, but it takes a month. Yeah. So so anyway, so I think that like we did not have a very high kind of customer. Like, even when we raised our Series A, and we didn't have a very high customer count. I think we're probably like 10 or 11 customers, but there's a lot of like customer love, and there was a lot of like you could see how this would actually go into other industries, other companies, like bigger companies, all that sort of thing.
That's so funny. You just said we raised a Series A with 10 or 11 customers, and that wasn't very many customers. You have not been paying attention to very many recent Series A's, have you?
Well, yeah.
10 or 11 is a shit ton, dude. That's a large amount of customers for a Series A these days, especially in payment infrastructure. It's a huge amount. Anyways, that's enough shit talking on that specific subject. I'm curious though, listening to you talk, how much time do bankers Describe the UX a little bit better for me. Do bankers spend a good amount of time in the Modern Treasury system? Do you just kind of plug into the bank? Like, how does that whole situation work? Because I know definitely they're like, just reading the use cases and everything, all of the brands that you work with are like, we spend all this time in the Modern Treasury back end, like this is where we live. Is that true for bankers too?
Not so much. I mean, really, where we're connecting to the bank systems is more kind of in the over SFTP or API or what have you that they have. So what ends up happening is, every bank has some sort of interface that they have, and sometimes they have multiple systems, and we have to kind of figure out like which one's the right one for our customers. But we kind of built to that, and then once it's up and running, the banker, I mean, one of the benefits I think for the relationship manager at the bank is that a company in the previous world, sort of, you'd have to ask this company to go build something for, a matter of a few months, and then of course there's an internal conversation that happens in the company where the CFO, let's say, wants to go like enable something new, or the product team or whatever, but the CTO has to kind of allocate resources, and so it's like you start waiting around like, well, when do we have 5 engineers to like focus on this for like 3 to 6 months, and the answer is not always immediately, and so there's kind of an element of from a bank perspective. I think one of the biggest values of what Modern Treasury can bring is just like turn kind of prospects into like happy paying customers faster, like. And if it takes 2 weeks instead of 6 months, I mean, not only is your NPS score going to be a lot higher, because as a banker, you're not sort of asking somebody to go do something that's relatively painful sometimes, but it's also just like you start getting transactions faster. Like a core kind of fee income is important to the bank. So from a UI perspective, the bankers themselves aren't necessarily using Modern Treasury's UI per se. Like there's definitely versions of the world where that would make sense, and we can go explore that sort of. But where I think we're really bringing in value is just, you have a prospect, they want to do a thing. How do they do that thing? Yeah, like now.
Yeah. How do you facilitate it quickly? It makes sense.
Well, and the other thing is like all the exceptions and all the failures and all the things that happen. Yeah. Like, how do they not become just like giant kind of customer service, clusters? Because we have actually seen that before. Like, we have seen the edge case. We have tooling around it, and it's not disruptive to the company, but by proxy, it's also not disruptive to the bank.
Yeah, I mean, one of the things that when you were talking earlier about the 18 different Google Sheets that connected through the 5 other APIs on the back end to the front end of this, like it's just innately going to break no matter what at some point during that month. That is what I saw happening across a number of community banks that were starting to especially support neobanks, and I was seeing these chief innovation officers being brought in, and like 90% of the time it was just about building the correct data layer and then somehow turning that data layer into visualization. Like, they should have just been like Power BI officers or something like that, because it didn't really have shit to do with innovation. It was just like, it was almost like CYA of how do we visualize this in a way that the CEO and the CFO will be able to understand quickly and like report to regulators. So I don't know. It's interesting to think about how what you're doing could, once you solve the gigantic problem in front of you, be that eventually.
Yeah, and I'll go so far as to say I think we should. I mean, I think that one of the things that, if you think about just the whole world of compliance, like, it's all about context. Like, the way you catch kind of fraud and the way you find out that something is kind of off is you tie systems together and you see correlations. Like, that's literally the only way you can do this. And so anything that makes those kind of connections easier is going to be super valuable. And I think that it's, to your point, it's going to be valuable to the compliance officer at the bank, to the CIO at the bank, to the regulators. It's not just, I mean, it's very important for the CFO of the company that we're serving. Yeah. But even in the context of the conversation or the kind of relationship between the bank and the company, exactly, we can provide like a layer of sort of, hey, like, we can kind of, I don't want to say like sort of look over your shoulder, but it's more like, we can enforce this policy across a certain set of clients. We can put a green check mark next to every counterparty that's been KYC, things like that. And I think that's a really important element of value that we can provide for the banking world, and by proxy for the companies that are the banks then feel more comfortable serving.
Yeah, I mean, real-time data transparency would be an absolute groundbreaking thing in this
Cool.
world, and with regulators too, man. I mean, I think regulators, they have the biggest, like, talk about a month taking a month. For them, you know, a year takes a year, and then they come in and they look at the stack of papers and they're like, wait, you added how many partners, and they're doing what? And, like, even if it's all totally above board and, like, well handled on the compliance side, and, you know, all the contracts are in order, regulators still just get nervous finding out that you're growing that fast in a new direction. You know, it's wild.
And it's real work, like looking kind of
totally
into it and figuring it out, sort of, for sure.
Anyways, I've become more and more of a supervisory technology nerd now that I'm getting into the Money 2020 world. I'm like understanding more of how the world fits together, and well, anyways, it's
if you want to come build a supervisory product, you know where to find us.
Noted, my friend. Noted. So let's get into actually the first way that I heard about you all, which was on Acquired. Well, maybe it's not the first way that I heard about you, but it was the way that I went from a company called Modern Treasury, which anytime that the word treasury is involved, honestly, I'm like, I can't keep them straight. And then I saw you guys on there. I was like, oh, this is absolutely fascinating. I know who this is. And then it all clicked and came together. How did that come about? And tell us the Acquired story.
The Acquired story was really, we met Dave at some point, kind of living in San Francisco through the startup world as we were kind of building. I think we were probably out of YC. I had started listening to the Acquired podcast. It's absolutely wonderful. You should all go listen to it. But and they had their first. We were in this WeWork on 6th and Market, and there was like an auditorium there, and they had their very first get together in person for the Venmo episode, which was like topical for us, and it was in our building, and I like Acquired, and and so we're just like, let's just go kind of literally like go from the 4th floor to the 2nd floor, and let's take on this level of effort to actually participate in this get together, and met Ben for the first time, got to be kind of part of a little bit of that community and so on, and then one of the things that kind of really elevated that relationship, if you will, was when COVID happened, we were we did some of these kind of Zoom happy hours. I'm sure you've been on some that are not very exciting.
Yeah, no, they're terrible.
They're terrible.
They're terrible.
And so I started as on a whim. I was just like, we need some free entertainment or something. We need to start inviting people to this that will tell us about interesting things. And so at first, I think Daniel Vogel, who is a good friend and like a seed investor and the co-founder of a company called Bitso, which is kind of a massive company in Latin America, in the kind of crypto kind of exchange and wallet world. I think he just joined randomly, and he just told us about crypto in Latin America. Like, sounds crazy. Like, it'll be fun to have somebody kind of tell us about it, kind of off the record, no nothing sort of. And that took on a life of its own. So now we have a weekly tradition called the Coffee Break. And instead of having Zoom happy hour, we have a guest, and we have a guest that is a founder of a company that we might be working with, and we get to hear what they're building. And so then the feature request that they ask us like a month later kind of fits into the lattice of like, oh, I know what you're trying to build and why it matters to you. And the whole company gets to hear that and see the customer and things like that. We get investors, we get just people we find interesting. And so one of the people that we found interesting, one of the guests was Ben and David, and I asked them, hey, can you guys just like spend 45 minutes on a Zoom with us off the record? And they're like, let's put it on the record and let's actually release it as a special LP episode. And our mode is sort of learning. Like, my favorite thing about Modern Treasury is we get to go into all these companies and just like learn all about how their business works, and it's kind of this business school nerd like on steroids. And he's just like loves that. So we really wanted to hear the Acquired story, and they're like, nobody's ever nobody's
ever asked.
Like, we're the interviewers, and we're like, no. You guys are going to answer questions. Like, you're literally just going to sit here and answer questions that we ask you. And so anyway, this was like height of COVID. Everybody's at home. Everybody like needed something exciting sort of, and they joined the Coffee Break, and you can go listen to that podcast. It was super fun to have our team interview them about how Acquired came to be. But I think that we built a special kind of relationship from that.
As Ben and David would say, I will link to the show in the show notes.
Yeah.
It's awesome, man. It's cool to see the way that you guys have I don't know. There's something about your brand, and I'm curious about your perspective on this, that doesn't feel like it's marketing to me while it's marketing to me. It's an interesting thing. Like the way that you found the relationship with Acquired, the way that, I mean, honestly, that you found the relationship, and I don't know how, Matt Marcus has kind of been the main person involved, but VSUM as well, Value Summit, and just getting, not ever really asking for anything, but getting a lot, I think is something you guys have figured out. Like you just give, and you kind of show up in a way that allows folks to ask you questions, and you're just friendly, and then by accident you seem to get business. Am I nuts in my oversimplification of this, or are there true ROI goals that I'm missing? Like it seems too human.
I think you just described the way Silicon Valley got built. I mean, not to kind of wax poetic, but you talk about Y Combinator and how Y Combinator got created, and you talk about, I don't know, like even, Benchmark and Sequoia and so on. Like, I mean, in the beginning, they were all about empowering. It's all about empowering companies and founders and kind of early. I mean, I think one of the things that's super cool to me is just now when people join and, they're like join Modern Treasury, and they're kind of like they're coming into this built-in sort of base of knowledge that we like worked really hard to create, and like they shouldn't really think about anymore. Like this is a problem that this is maybe like a very lofty way of saying it, but it's kind of like that's what technology is. We like humanity solves a problem, and then it's like not a problem anymore. Like we can move things up hills now. We have wheels. Like it's it's not as much of a problem, sort of. And so I think it's part of it is, again, like we just have this somewhat unreasonable maybe, but like just like, hey, I think this thing is going to be like a real problem for a long time, and nobody's been trying to solve it. So let's go solve it. And if we solve it and it's valuable, then we'll get paid for it, and things will work out. But there's sort of this techno optimism that I think is maybe just like we grew up with. But I think that it's core to how like the best companies get built. Like I don't think the best companies get built by saying, here's my TAM and here's how I get 70% of it. Like that's not the whole concept of TAM. I think is just kind of funny to me. Like I think it's an insult to your product team to define a TAM, because you're basically saying like,
that's interesting.
If you're a Sony, like is your TAM like radio transistors, or like might you invent a PlayStation? Stuff like that. So anyway, I think like if you go back to the origins of early kind of companies in the first kind of couple of years, and you do that exercise that I think a lot of times people try to do in sort of the venture context of saying, what's the total addressable market for this widget? That's very rarely really relevant, I think. I mean, how many computers were there when Microsoft was started? And yet, Bill Gates' mission was, a computer in every desk in every home. Well, that's not, I mean, that TAM was like 10 computers probably in 1975. So it's sort of, I think we think of it as this problem isn't going away. It doesn't matter if we move to, the digital dollar and crypto and things like that. Like, you're still going to have to know what's happening in your business. You're still going to have to handle like approvals. You're still going to have to know, how customer service answers questions about things. So it's like the format changes, but the problem doesn't go away.
Yeah, I really appreciate that ethos. There's companies that are from your geography that go raise that Series B normally is when I start to experience this, and then the marketing folks come in, not the growth folks, and all of a sudden you're trying to get somebody involved in a community without even asking them to pay, and then they're like, well, give me an email list of everyone involved, and how can I email them 16 times? It's just like, just shut the fuck up and show up and add value, and you will get something out of it. So I really appreciate it, and I think it's a lot better to be the content of the email than the,
Yeah,
totally.
And we sponsor emails, and I'm not saying that we don't do that. And everything, but you want to create something meaningful for the world, so that puts you in the content of the newsletter.
But even your sponsorships are content marketing. Like even your sponsorships on Acquired are still content marketing. It's not like they're reading an ad. I mean, I guess maybe in weird situations they are, but they're like talking to one of your users, right? Or like they're explaining the product in a way that is not. Doesn't make me want to vomit, which is unique. So it's really cool, and I value it a lot.
It's a high bar. Sounds like we cleared that bar.
I mean, that's a fair point. It's a fair point. All right, man. So final question for you is, well, kind of twofold, but it's 1.5-fold. So one is, what can the For Fintech Sake community do to help you? Are you hiring? Are there new pieces of the product you're thinking about that you need specific expertise on? Whatever it might be, or, customers are always great, whatever comes up in mind for you. And then the second piece is, if folks do want to help, how do they get in touch with you to do so?
Yeah, I mean, we are growing. We're a little over 100 people now. We are continuing to hire in product and engineering and sales, customer success, marketing. If this conversation about marketing that just occurred resonates with you, come talk to us about roles in product marketing or growth marketing or content or all that stuff. I mean, I think the other obvious kind of ways to test out our product. I mean, you can go sign up on the sandbox. You can contact us to get a demo. You can tell us about problems that you might have that we may not be solving today. But as I just described, we think of our total addressable market as problems that we don't solve today also, and so we can go solve them. But we'll be very happy to engage with anyone in the community. We're at moderntreasury.com. I'm on Twitter. It's my last name, Dadiomov, Dadiomov. And feel free to DM me or reach out to anyone at MT. We're trying to be friendly.
Well, you've pulled that off. Not only do you try, but you are. And I highly recommend the Twitter follow, not just for the sake of the DM, but for the sake of the fucking guffaws that I get at like 11 p.m. reading your hot takes. So I highly recommend that to listeners. I'll link to everything else in the show notes. Dimitri, thank you, my friend. I really appreciate the time. I've learned a lot and just had fun. So thank you.